Hello, everybody. Welcome to another Soulstring Report podcast. I'm Kenny Soulstring. We have a really special show for you today. We have the CEO of Aytu BioScience, Mr. Josh-disbrow. Aytu trades on the NASDAQ Capital Market under the symbol AYTU. Just a quick house cleaning. This podcast may include forward-looking statements within the meaning of Section 27A of the Securities Act of 1933 as amended and Section 21E of the Securities Exchange Act of 1934. And all statements other than statements of historical fact contained in this presentation should be considered forward-looking statements. And for a more detailed disclosure, please visit soulstringreport.com. All right, so we'd like to welcome Josh-disbrow. He is the CEO of Aytu BioScience. Mr. Disbrow, thank you for being on the Soulstring podcast today. Hope you're doing well.
Yeah, thank you, Kenny. Thanks for having me. Good to be on with you.
So, as my listeners and readers know, we've been following Aytu for quite a while. I've written extensively about the company, and just full disclosure, I'm long the stock. And I know I've gotten a lot of interest from readers and some pings just on email. Really wanted to find out a few things about Aytu and try to get a little more in depth other than just the press releases. So I have some questions we'd love to get into with you if that's okay.
Yeah, happy to be thrilled to share with you what we're doing and a little bit about our products and our plans going forward. So yeah, fire away. Happy to answer those questions.
So where we are today, so Aytu BioScience, you have three really very unique and potentially lucrative drugs hitting the markets and some already on the market: natesto, ZolpiMist, and tuzistra-xr. So from a strategic point of view, what drew you to these specific drugs?
Yeah, good question. Our strategy, just for any of your listeners who aren't aware of us, is to really buy and or license assets. And it's really what we call a buy and build model of portfolio development. So these products were all acquired. And when we go out and seek products, we're really looking for unique products that compete in large markets and treat common conditions. So that's really specifically what drew us to all of these products. In the case of ZolpiMist, natesto, and now most recently tuzistra-xr, they're all unique in that they're uniquely formulated. They're different formulations of established molecules. They compete in very, very large markets and, of course, treat common conditions. And just to go one by one, natesto treats low T, hypogonadism. That's a condition that affects about 13 million American men. It's a nearly $2 billion market at wholesale, and it's a common sort of everyday condition, if you will. ZolpiMist competes in a similarly large market, about a $1.82 billion market, and it's an oral spray formulation of Ambien, zolpidem tartrate. I should go back and say natesto is a nasal gel formulation of testosterone, when testosterone is typically delivered via a injectable or a topical gel. So natesto is a nasal gel, ZolpiMist is an oral spray, and then finally with tuzistra-xr, it's a long-acting formulation of codeine, which is a very common cough suppressant or antitussive. So unique products, very large markets, and again, common conditions are really the three ties that bind, if you will. And just kind of rounding out the opportunity, tuzistra competes in a roughly $3 billion market, so actually the largest market potential of all of those categories. So we're excited about all the products. They really are unique in their own right and really are complementary in that they can all be sold across the spectrum of customers on whom our sales force calls.
Mm-hmm. And of course, so therein lay the paradox of investing. And if we knew the answers to all these in and outs of investing, everyone would be their own financial advisor. But this is kind of the question. So you have three well-established drugs in the market, and the share price really isn't showing probably the respect it deserves, especially from a market cap standpoint against its peers. And I know that CEOs really spend more time on company than they do on share price. However, shareholders really been pinging me and would hopefully like to get your perspective as to why you think the shares are not following the fundamentals. And maybe you can provide just a personal overview of your take on the valuation.
Yeah, good question. And you're right. I do spend the vast majority of my time, and we, of course, spend the vast majority of our time as a management team managing the business. We're operators, and having been an operator and running the commercial organization for a company that we exited a valuation of over $1 billion, we know how to do that. That having been said, I certainly look at our valuation and would acknowledge that we are undervalued. What CEO doesn't argue for a higher valuation for his or her company, but in our case, I think it's particularly true. Having just completed a $15 million financing on the precipice of closing a $5 million secured note with Armistice Capital, that'll put us with roughly $19-20 million in the bank. Frankly, we're trading at significantly less than just the cash we have on our balance sheet. So ultimately, we believe there is an opportunity and a big disconnect. There are often investors that look for dislocations, if you will, between fundamentals, operational achievements, the progress, and of course the share price. So we would argue that it's not following the fundamentals. We've shown significant growth quarter to quarter to quarter. We've had sequential growth of over 50% the last 2 quarters, and are now up over 1.4 million in quarterly sales and trending higher this quarter as I speak to you today here at the end of November. So we're executing across our platform of growing our commercial stage assets. We're out there executing and growing our prescription sales, and ultimately we expect to continue to narrow our burn, get the company closer and closer to profitability, and ultimately at that point perhaps get credit for a multiple of sales, which in the specialty pharma world would be anywhere between 3 to 5 times annual sales, and that's just a general estimate. So just as a recap, I would say we are undervalued, and it potentially does present a good opportunity for shareholders.
And I appreciate that, but let me try to stretch you just a little more then. So a year from now, where do you envision these 3 drugs?
Yeah, good question. We don't specifically guide in terms of revenue expectations, but what I would say is we would fully expect a year from now that all 3 of our products, natesto, ZolpiMist, and tuzistra, are very firmly established in their respective markets. And I can say that we don't need to get very large market share in any of these markets to garner a relatively high revenue run rate. And I'll just point out one example. If you, for example, in the sleep aid category. The sleep aid category is roughly a $2 billion category at wholesale, generating in excess of 40 million prescriptions. But just to make it even simpler, if you just took the 30 million prescriptions of zolpidem tartrate, so that's the molecule that is Ambien. So that's Ambien CR, and all of the generic equivalents. That's a 30 million prescription category. If you take the price of ZolpiMist and simply multiply it by 1% market share and apply the requisite discounts to get to a reliable net sales number, that's about a $50 million run rate. So just 1% of that singular market for ZolpiMist would be about a $50 million product opportunity. Again, we're not guiding to that specifically. We're not guiding to a time frame whereby that might be achieved. But what I hope to illustrate, and this carries through for tuzistra as well as the opportunity in natesto, 1 to 3% market share in these very, very large markets garners a company of our scale a significant revenue run rate. And it's one that we believe is not too far off in the distant future. So a year from now, we'd simply say, we hope to be established in the marketplace and really on our way to getting recognition, as leading products in these large therapeutic areas.
Great. You just a few moments ago alluded to the $5 million investment from Armistice Capital, and then you already have the FDA approvals in your hand. So, what do you think of the near-term catalysts that really can start this drive higher on a valuation perspective?
Yes, I would say initially we expect to continue to see significant revenue growth from quarter to quarter to quarter. As I mentioned earlier, we saw over 50% growth from 2 quarters ago to our fourth quarter, and from our fourth quarter to our first quarter, which ended September 30th, we saw another 50+% revenue growth. So while we don't expect necessarily that same percentage growth forever and ever, we expect to see a significant growth rate, and not too far below that rate, quite frankly. So we expect to announce on a quarterly basis significant revenue growth on the backs of prescription growth for our lead products. We also have a very, very exciting opportunity ahead of us with natesto. We haven't gone into depth in natesto, but what I will say is one of the distinct advantages that we've now observed with natesto is that it appears to be the only testosterone replacement therapy that does not impair male fertility. It's known that testosterone replacement therapies do in fact impair fertility by virtue of essentially rendering sperm non-motile and in poor concentration and low count. Ultimately, what we've seen with natesto in a study done out of the University of Miami, we've seen minimal impact on the key hormones that drive sperm production, in turn resulting in essentially no change in spermatogenesis, so the generation of sperm cells and their subsequent motility and function. That's huge. That study would be the first of its kind, the first study on Earth to show that a testosterone replacement therapy does not impact male infertility. And that's a big deal for the 20% of men that are low T and are in still their family formation years, still of the age where they're planning to have additional children, or maybe not even having had children yet. That's a big deal. So these men now potentially have options. So in terms of catalysts, in terms of what might drive the valuation higher, we expect a final readout of those data next summer. So it's not too far away where we think we'll be able to get a full glimpse into the entire patient cohort to really understand that natesto, in fact, does not impact fertility. Again, would be the first such study of its kind to demonstrate that, and we're excited to see the results. I'll say the preliminary results, and we have put out glimpses of this, the preliminary results are quite encouraging, demonstrating at this point, through, not quite halfway through the study, but call it an interim readout, demonstrating no impact on sperm concentration, no impact on sperm motility, and no impact on total motile sperm count, 3 key semen parameters. And this is after 6 months of treatment, which is the equivalent of cycling through 2 full sperm cycles, life cycles, on natesto 3 times a day. So taking the highest recommended dose over 2 full sperm cycles, we've demonstrated no impact on sperm function and sperm levels. That's nothing short of unexpected, and quite frankly, has a chance to really change the paradigm in how physicians, specifically reproductive urologists, think about treating low T. So we're excited about seeing those results, and we think that represents a significant catalytic opportunity for us.
Right, and I've written about that, and I think it really is an exciting drug. I've been very high on the natesto for quite a while, and I think the opportunity is going to be huge just for that drug alone. Not even counting for zolpidem and tuzistra, which also have huge potential. But just to close out here, I've got one question that this popped in, and well, it's a 2-part. One, can we expect any updates on the natesto sales here on monthly? And what about partnership opportunity? At what point would you entertain them, or are you that confident in the pipeline that you really are going to take it alone at this point?
Yeah, so I'll take the first question first, which is, do we plan on putting out subsequent updates around natesto? In fact, we do. We will continue to update the market on our progress with natesto and put out shareholder updates. We've not necessarily been beholden to monthly, but we certainly will commit to regular updates and provide shareholders with the appropriate insights as various milestones and prescription numbers become available. So certainly that is something that we expect to produce. And in terms of whether we think we can go this alone or potentially partner products or partner ourselves, frankly, we're building the company to be standalone. And ultimately, in the past, when we've built companies to the degree that we have, if you can operationalize the company, be very efficient in your spend, and ultimately grow your products, good things tend to happen. We're not necessarily building the company for sale. We're building the company to build a very solid, fundamentally sound company. And again, when those things happen and when the fundamentals come into place, ultimately that does typically spell positive things, but we don't necessarily plan for that. We get up every day and focus on execution, and that's what we've been doing. So we're excited about where we are, very thrilled with the recent progress, particularly over the last 3 quarters of strong subsequent sequential growth, and expect to continue to see strong growth as we go forward, considering the fact that we've just launched zolpidem, have not yet launched tuzistra, and are really now hitting our stride with natesto. So with that, we're excited about what the future looks like for us, and think we can build a very nice, sustainable company that ultimately rewards shareholders.
Right, and that's great to hear. And I would like to thank you just for coming on and bringing the shareholders up to date about what's going on at Aytu. I know it's exciting times, and we appreciate you fielding these questions and reaching out a little bit to your shareholder base. And I just think this is some really great information. And I certainly, as a shareholder, look forward to what's coming up here in the next several quarters. And thank you so much for joining us today.
Thank you, Kenny. Really appreciate you having me on. Thanks very much.
Okay, bye-bye.
Bye. All right. Is that a wrap?
That's a wrap.